Hello, my name is Mr. Remick. Today we're going to study IWM. This is back to testing a trade that I really made. And we're going back to Wednesday, February 15th of 2023 at 1:10 in the afternoon. Okay. So what did I set up? First of all, why did I set it up? Okay, I'm looking at the chart going back, I don't know, about a year. Let's see. Okay. So I'm looking at the chart, what previously happened, and I'm looking at the low. And then I'm looking at the high, and now it's kind of low. But it's at like a double bottom area, actually below a double bottom. So what I did is I did two things. I did a straddle. I sold a straddle at 180. Now, at the time, let's see, pause here. See what this does. Oh, okay. All right, this is the beginning of my trade, and here's the risk profile here. Go to the price chart. For some reason, and probably I wanted to have the break-even points about here and about there. That gave me, and this is right in the middle because, you know, here's the top, and this is not quite to the lowest range, but anyway. But so it's trading at the time at 193. To create that, what I did is a risk profile like this, which incorporated selling a straddle at the 180 strike 30 days out. Usually I go farther out. At that time, I guess I didn't. And so instead of, if I did, the reason I added 75 shares is to create a slightly positive delta. And so if I have a positive slightly, if it goes up, you know, I make money because I'm assuming with all my trades, ultimately they go up. They go down, but on the long run, they go up. If it's something like IWM, which is the Russell 2000, the history has been over the years, it's upward trajectory with downturns occasionally. Sometimes those downturns can really take you out for a long time. So I made that trade, and I wanted to have a upward bias on the delta. You can see where my pointer is. Delta is 8.23. In other words, every movement of the underlying stock, if it goes up 1 point, this option will go up $8.23. So I'm controlling, you know, anyway. So I'm controlling 100 shares basically. So that would be if forget it. So let's see what it would be like if I didn't put on. Let's see what it'd be if I didn't put on the 75. That the green line would be the risk profile, and you see I would be counting on it going down in price. And I have a negative delta of 66. So that's why I did that, because uh, that's my idea. That's what I think is going to happen. Is it's going to go up, but not a lot. And if it goes down, and I hang in there, it'll probably go up again. And if it goes down and stays at this level, eventually I'm going to, make this amount of, I'm going to be doing good. So let's let's go a day ahead. Okay, you see what happens. It's just squirreling around. Everything's, I mean, at this point I lost $92, but we're just beginning. Oh, another thing I did was I rolled. I rolled out the 180. See, okay, this goes back to zero, but it wasn't too much after that I rolled out. Oh, in the same day, later on in the day, I just rolled it out to 93 days. Right? To acquire more premium and to would widen my break-even points. Okay, let's go another day. Going forward, just no major movements. Still went down a standard deviation for the day. 7 days into it, and down $186. Oh yeah, 12. So my cost on this is um, $12,297. That's how much I got for it. Um, at a margin, let's see, 12,000 tonight. I got more extrinsic value than my margin is. Okay, let's continue on. Not too much difference. Um, Pretty much broken even 13 days into it. 15 days into it. 16 days into it. Let's check out the chart. So it's gone a little down. Back to the risk profile. $53 profit. 88.75 profit. 20 days into it. Back to even. Okay, now standard deviation and I'm down $555. Now I'm down 750. See how you can go down? You can lose a lot really fast. Let's go 2 hours back. Okay, it's now at this point, it's right on the break-even point. Okay, let's go a day ahead. Okay, still lost, not as much. 27 days, about a month into it. And you can see that the options that I sold, it's now 65 days until you know, 29 days into it. Still losing dollars, 555. Oh, now I'm really down. Down $1,000. Yeah, it went right down, hit that point. Previous bottom. I guess I hung in there though. Doesn't look like I made any major changes. Okay. Okay, now 465. Okay, now down 910. How long is this going to last? Okay. Just yo-yoing around. Some people would get out when it got down to there, it's a loser. Get out. If you do that on every trade, you're going to end up losing money. It's kind of like if you make a commitment, you got to stick with it. It's the law. $43 days, 44 days into the trade. Now I'm only down $90. You can check it out down here. See, up to April 4th. Still losing money, but not as much. And you can see what's happening on the chart. It's found a bottom, more or less, trending sideways. Notice that theta is $10. So every day that goes by, it's eaten up $10 in time value, which goes to me. Here we go. Marching along. I've made no changes to my positions. You can see by the pink one, that's the range that the little marble has gone into. So the lowest it was 176, and the highest would be 178. So not too much movement. 57 days into it, I'm actually making a profit now. $261. So 2% profit so far. And we still got a profit. 2 months into it. 2 months into it, and I made 1.7% interest. So if that was annualized, that would be about a little over that. That'd be like 6% profit. Not bad. I mean, anyway, I don't know. If you can get something that's guaranteed to get 6%, but uh, you wouldn't be doing options anyway. Okay, 65 days into it. Down we go. Another standard deviation down. Mm. Oh, okay. Let's see. And I rolled. Okay. You can see I rolled to, oh, let's see. I rolled it to, let's go back. Hmm. Oh, shit. That's back to 93 days. Um, okay, I rolled it up here to 99 days, both of them. And I'm sure I got some premium for that. So I increased, um, so I was about nine, now I'm about $11,000 in premium. And just breaking even. But before, when I began the trade, when I was down to 177.99, I was losing money. So, and it's so if I just got the equivalent in straight stock, I would be down because I I would have bought the stock at 192, so I'd be down now, but um, up because I bought the option. Yeah, it's flatlining almost. Okay, what I'm going to do just to speed this up is I'm going to go to when the next time I rolled it or made a trade. I must have done that. Now I'm at 148 days out, so I rolled it again. Let's see that, and you see how this curve, I got more and more premium as each time I roll it out, I get more premium, and this becomes larger and larger. And this line moves up. Okay, this is the. Oh, okay. I made. Looks like I didn't make a trade. I don't know what happened there. Let's go to the next trade. Okay, something happened there where I made some really good money. Yikes. Okay, let's start from here. Okay, I increased it from um, whatever I had before to September 15th, 149 days out. And then after that, looks like it's getting jacked up. So let's see what happens if I go just on a daily basis. It's going to be trending upward. Hmm. Backsliding back to 175. 69 days ago, that would have been, underwater, like big time underwater, like $1,000 or whatever. Continuing on. Going down, down, down again. 171. Low, low, low. At some point, it's going up. My delta is 104. Huh. 82 days and I'm broken even. Sometimes you got to wait a long time. Not much to say. And, 3 months into it, and I have now $523 in profit. Yeah, just in one day. Go back. Made a couple $100 in just one day. Let's see what another day brings. So anywhere along the line, a lot of people would be out of the trade. I've been in the trade 3 months. People get tired of it and whatever. So you see, it was getting up to my strike prices, and I've rolled out so far now. But if I was closer and I hit the strike price, that's a good time to roll because you get a lot of premium. Shit, it takes a long time. Okay, 733. 900 ahead after 4 months. So after 4 months, I'm lower than when I when I put on the position. The IWM was about 190 something, 192, and now it's 186, which is lower. So if I had bought stock, I'd have a slight loss. My delta's 44. Let's check out the chart. Okay. And you notice that when we started here, the volatility curve or the standard deviation curve the cone of deviation, it went down. It touched two deviations, but then it started going along sideways for a long time, and now it's up. So went within one standard deviation. All right, 1,100 price chart. Let's skip ahead to the next trade that I made. Oh, I was at September 15th. Now let's see where I am. October 20th. So I rolled it another month. Huh. Okay, let's see what happens when I do the next trade. October 20th, 56. So now I rolled it another month, and I'm $1,800 ahead. Let's continue going to the next trade. Came down again, and I rolled it to December. So another month ahead. Hmm. Okay, let's go to the next trade. Oh, oh, so now I'm down to 762 profit, 53 out. Let's go to the next. And what I did, I took off the 75 to lower the delta, the 75 shares that I had. And now I am up again with a 21 delta. Okay. Now I rolled it another month. Then I rolled it up to March, 119 days. Oh, what did I do there? 205. I rolled something. I rolled the put. Now I'm down to 2. Oh, I rolled the put up to 205. And now the next thing I did was see how you get like back down to almost zero, 205. Oh, bummer. Okay. Oh, I added $100 to it. Let's continue. And here. Oh boy. Looks like I made a mistake. When it got up to there, you know, I had some good profit going there. But it's a continuum. It's going to go up and down. If I want to, get out at that time, then what would I do? Wait? Okay, let's January 11th. Oh, no, I know what I did is I traded the put. Oh, yeah, fuck. I made an adjustment. I got rid of the put because of the extrinsic value. Let's see what it is. 180. The extrinsic value is the $3 compared to $1, like twice as much. And that also equates to the theta. Look at 541 theta compared to what, 337. That's like $2 different. That's not less than twice as much, but it's significant. Okay. And that brings us up to the present time. I'm $741 ahead. And it's been 340, almost a year. And short of a year. and I made 3% profit in the year. Okay. Probably should have just stayed with what I had in the beginning. So we'll see what happens here. Yeah, delta 30. Okay, let's go 30. Let's get this. All right. One put? Um, let's see what the see if I got the equivalent if I bought 100 shares and sold and sold instead of doing the selling the put, I get more premium, but that would just jack up. Sometimes it's just not, it just gets into more shares and more shares. Just I don't know. I get tired of buying shares, but this would minimize the delta. Okay, I made $740. Maybe I'll just sell everything. and set up a new trade. Now look at this. It's so it's now, when I bought it, it was like a 192, and it's back a little bit above that in a year. If I had held stock, just straight stock, I would have made, not 740. At least I made more than that. Well, okay. Okay, that's it. Or where we are.